You are listening to chartingwealth.com for Friday the 16th of October 2015. Great to have you with us. We are looking at how the markets ended up on our two-day candle. And we can see that the markets continued, well, they crossed over originally. We're looking at IYY, where we always start. Forgive me, so used to doing that. IYY is the iShares Dow Jones U.S. Total Market Index Fund. What does it track? Well, it tracks the whole stock market. That's why we always start with it. We can see that for the three candles prior to the current two-day candle, so that's 6 days total, we had a nice trend line that we had drawn. The market broke through that over this last two-day candle, which ended today. And we see that it is a move down. Now again, we're looking at a two-day chart. We don't look at the daily chart. Everybody looks at the daily chart. Daily chart's not always as accurate, we have found, as the two-day chart. Two-day chart's a bigger chart, twice as large, and helps us track bigger movements. Now, we always talk about the bigger the chart, the bigger the potential money. So we have a down move. We don't have a crossover yet, but we do have it banging off a ceiling that the market self-imposed all the way back on the 17th of September when we had that Fed meeting where Janet Yellen told us that they weren't going to be raising the interest rates in the next few months. Well, move over to the last 2 days, the 10, 15 through 17 of 2015, and what do we see going on? Well, we actually see what's happening right now as opposed to what had been happening over the last few days. We see that the market cranked up and then hit a ceiling and has started moving over and down. Now, if we go back from that 15 candle and we look at the 4-hour chart, the half-day chart, we can see that the market actually did some recovering today. It's not crossed back over going up on the MACD. It's still in a confirmed down move on the short chart, but it did recover in the afternoon. Now, it's not recovered to as high as when it started the move down originally on the morning candle of the 13th of October, but we do see that it did have some recovery today. So we want to pay attention to that bounce back and see if it really has anything to keep it going, because we are technically in an up move in the big charts. So if we do have this move, we talked about this briefly yesterday, if we have this move roll back over, then of course that's usually the safest time to look into actually getting into an up move. If your big chart is going in one direction, your small chart corrects and then goes back in that same direction, well, particularly with the kind of span we have, the divergence we have in the MACD and the signal line, that means that you go for that up move. Okay, that's where we are on the total market. Now let's break it down a little smaller to what we call it's the Standard & Poor's 500, SPY. This again is an ETF, an exchange traded fund. It tracks the movement of the stocks in the Standard & Poor's 500 index. Crossed over going up morning of the 5th, on the two-day candle beginning on the 5th. It was on a Monday, the 5th of October, and has continued to move up since then. We've connected 3 candles for an up move. That was broken as the candle ended on the 15th of October. So we have we still have an up move, but we do have the trend line being broken. And if we revert back to our 4-hour chart, what do we see? Well, a lot of indecision in the morning. That was a doji. You can look up DOJI. We talk about it in our training online. You can look it up on Investopedia. Read more about it. It signifies, as far as Japanese candlestick trading goes, a lot of indecision. And then a big up move, actually back through the 2-day trend line. However, this move does not go as high as when the down move started. So it didn't cross over going up. So continue to watch it, see what happens. Again, if it does cross over moving up, parallels the up movement that we currently still have as far as the MACD goes, the moving average convergence divergence, and behind it, and those of you looking at a visual chart, there is a light green box that represents the derivative oscillator that's bigger than the boxes in the candles before, so it's continued to accelerate. You would want to seriously consider getting into that up move. Now, Let's go back to we're on our 2-day chart. Now let's go and look at the Qs. What is the Qs? Well, it is the PowerShare QQQ ETF. It represents the NASDAQ 100. And we see green up movements. We, in fact, can redraw our trend line a little bit. We're going to really have to go all the way to the new candle and see how that sets up for us. We got an okay trend line. We like them to actually be totally connected in the midpoints at the bottom. We don't have that, but it's better than nothing. We have a crossover going up back around the 5th of October on the 2-day candles, and it's continued to accelerate in its move up. If we go from the 2-day to the 4-hour, we can see that the MACD, that the Qs, is still in a confirmed up move, and in fact it crossed over on the morning of the 15th, going down and crossed back over on the afternoon of that was on the 14th, and crossed over the afternoon of the 15th, going up. Still not recovered all the way to this ceiling, but it is a confirmed up move on the Qs, which gives you, and it's above the 2-day trend line, which tells you, hey, consider getting into a potential trade on the Qs. So those of you who have your triggers that have fired, do consider going into a virtual trade on the Qs. Pay close attention. It has not recovered fully, but it has moved back over and accelerated going up. You don't have the telltale flip that we love to see in the derivative oscillator, but you do have the MACD crossing back over going up on the Qs. And the Qs was up 1.63% for the day. If we look at the SPY, it was up 1.35% for the day, and IYY up 1.52 for the day. And again, those of you looking at the visual chart, it does show a red candle on the IYY and on the SPY, the total market in the Standard & Poor's 500, but that again is a 2-day candle that's reflected, not the single day. Now, let's go from the indexes to gold. What is gold doing? Well, gold was down technically for the day 0.47%, but when we look at the candles, we can see that in fact the candles are continuing to move up on the 2-day chart. It crossed over a couple of weeks ago, back on the 15th, a month ago, 4 weeks ago, the 15th of September, and has steadily moved up until around the 25th of September, digested its gains till the 1st of August, and then has shot up since then. Let's take ourselves over to the 4-hour chart, which is the real trading chart for the Qs, and you can see where it again crossed over around the 5th of October and has continued to move up substantially and moved up throughout the course of the day, and we have seen it continue to push its way up. Technically, like I said, it is down 0.47% as opposed to where it had closed on the daily chart the day before, but gold has continued to make its way up. We do see a little bit of falling off of the derivative oscillator and a little bit of converging that is coming together of the MACD, but gold is still continuing to show us that it is moving up. Now again, those of you who've been in this play the whole time, at some point you do want to start taking profits, so be careful, particularly with the small about 0.5% down move for the day. Continue to watch gold and pay attention to it. You do not want to lose what you have made on it in case it really rolled over hard. That is where we've ended up the day on all of our indexes and on gold. Again, markets are very interesting. We're coming to the end of the week, so continue to pay attention. Thanks so much for joining us. If you don't have our short course on trading, it's only a 15-minute course. You should have that. Please email us, CW as in Charting Wealth, cw@chartingwealth.com. We'll send that to you. We'll also be happy to send to you the kind of layout that we use, all of the different points that we use, all the different indicators and the settings we have that I'm going over for those watching it visually right now. We send all that to you for free. All you got to do is ask us. We'll send you a link to freestockcharts.com, which is free, with our layout, which is free. And we'll send you the training. So we'd love to hear from you. all you got to do is email us, cw@chartingwealth.com. Please follow us on Facebook and Twitter and Instagram. All of those, just look up Charting Wealth. You'll get right to us. Thanks so much from chartingwealth.com.